HUF stands for Hindu Undivided Family. It's a way for us to save taxes. So we all have our PAN in our family, right? Everybody has its own PAN, everybody has their own incomes, deductions, income, taxable income, and the taxability which we pay on. So HUF is just like an extra PAN in our family. Now let's say I have numerous sources of income and I am already in 20% or 30% bracket. So I can divert some of my sources of income to HUF and can save on taxes. Now HUF also, the best part is HUF has taxability same like individuals. So HUF can buy or sell residential house properties. HUF has a basic exemption limit of 2.5 lakhs like us. HUF can also claim deductions under section 80C and income from house property under section 24B, which is interest on housing loan repayment. It's not just for Hindus, it's also for Buddhists, Jains and Sikhs. So if you are an individual and you have a family, at least 2 people, a married male member can form an HUF. The eldest male member of the family is called as Karta and the remaining members of the family are co-partners in the HUF. So if you have a family, you can register HUF with a legal document, you can get a PAN number and you can get started. Your HUF is formed and you can start saving on taxes. Mr. Rohit forms an HUF with his wife and son. Now we will see his tax liability before and after. Before, he has 2 business income. From one business, he is making 12 lakh. From another business, he is making 6 lakhs. He is also having an ancestral property from where he is earning rent income of 5 lakhs. Also, his wife has also her own incomes. So you can see below, this is the net tax liability of the entire family. Now, after they have formed HUF, what Mr. Rohit has done is, he has diverted his second business income of 6 lakhs in the name of HUF. He has also made the ancestral property get transferred directly to the HUF. And HUF can also claim deductions, for example, life insurance premium paid for the life of the members of the family. So now you can see, after the HUF is formed, below is the tax liability of the entire family. So in conclusion, the family saved around 221,450 amount of taxes after forming HUF and diverting their income to it. Amit forms an HUF with his wife, 2 children and his father. Now father is having some pension income, Mr. Amit is earning from his job and wife is also doing some business. So everybody is into 20% or 30% bracket. Now Mr. Amit side by side invests his money into stock market and does stock market trading also. So Mr. Amit decides to form an HUF and diverts the stock market trading income into HUF. So by diverting the dividends and the capital gains income into HUF, the entire family saves money because HUF is taxed at a much lower rate than Amit's salary and his wife's business. So when you're earning from multiple sources, numerous sources, and also you're having huge income, HUF can help you save taxes. HUF is beneficial if you are earning in higher tax brackets and also you're earning from numerous sources. Now an HUF can own an residential house property just like an individual. It can also avail home loan to buy a residential house property. It can also claim deductions under section 80C for housing loan repayments for the principal amount. It can also claim deductions under section 24B under the head income from house property for interest on housing loan repayment done. Now as per income tax laws, a taxpayer can claim only 2 self-occupied properties. So if I am having 4 properties, I can claim only 2 properties as self-occupied and the remaining 2 properties I have to offer them as they are deemed to be let out. Now for deemed to have been let out properties, I have to offer notional rent, that is market price that the property is able to fetch. So therefore, it will be taxable. But let's say if I divert two self-occupied properties to the HUF and keep two self-occupied properties with me, I can hold all the self-occupied properties with the income nil and the taxability also nil. So if your parents transfer property to your HUF instead of transferring property to you, it will be very easier for you to save taxes. Any assets received from any heads would form the part of the HUF asset pool. The first one, when a bigger HUF splits, the smaller HUF gets the assets. For example, when there is partition of father's HUF, those assets get distributed and redistributed to the son's HUF also. Second, when HUF gets gifts from families and friends, so all these gifts join the collection of HUF asset pool. But any amount exceeding for rupees 50,000 received from non-family members is taxable to HUF. Third, inherited items. When someone passes away from the HUF, the assets partitioned gets transferred to the HUF asset pool. Fourth, any HUF member can give their own assets to the HUF, but it doesn't changes its taxability. For example, I can transfer my house property to the HUF, but for the rent income, the clubbing will happen and the taxability will remain in my hands.